Okay, thanks for taking a look at this video, folks. I wanted to take this time to try and do a walkthrough with our Krevoy Team Arbor mobile app. The app has got some pretty cool features on it, but most importantly, it has a really dynamic mortgage calculator app. And Shane and I are usually willing to jump on and go over a scenario with somebody. But you may be looking for answers at a time when you can't easily get a hold of either of us because we might be in a meeting. Or, it could be at night at 9:30 or 10 o'clock while you're just kind of poking around looking at places and you want to know what a monthly payment would look like. I usually start work at about 8 a.m. in the morning and I'm not done until 7:30 or 8 o'clock at night. I have a hard stop at 8 o'clock with my wife. She demands that I shut everything down because I'm usually asleep by 9:30. So this app can be really helpful if you're looking for quick answers. And once you get used to it, I think you wind up loving it. So first thing is whether it's on the text or whether it's the email, you're going to click this link. You'll see this page just flashed wanting to know whether or not I have basically an iPhone or an Android. It wanted to take me to the App Store or I think the Google Play Store. This phone already knows that I have an iPhone because I've already downloaded this app. If you have not downloaded it, it's free. And you'll see something very similar to this, but you're just going to click it to download it. And then once it's downloaded, you're going to open it up. Now, you'll notice this took me immediately to our app with all of my information because I already had it downloaded. When you click that app or the link, I'm sorry, it's going to just get some basic information from you. It's going to ask you, your name, maybe email address. I can't remember if it asks you who your loan officer is, but obviously that would be me or Shane. You can start an application through this link. You can look at some of the reviews of Arbor Financial. Um, it doesn't allow us to click to point you to our reviews as a team. And if you haven't done so yet, I encourage you to just Google us and you'll see that at last count we had over 170 five-star reviews. You can refer us to somebody. There's a document scanner portion of this. But for the sake of this exercise, we want to take a look at the mortgage calculator. So if you're looking to do a purchase, it's going to be that button on the left, refinance, the button on the right. Let's go ahead and click the purchase. The first thing I want to point out to you is up above here where it says type. You'll see that when you touch that up there, a drop-down menu comes out that allows you to choose whether or not you're looking at a conventional, an FHA, a VA, or a USDA. We're going to go ahead and just stick with conventional for right now. So the next thing you're going to want to do is go to the home price. You want to make sure you delete what's ever in there because if you don't, it just puts a really long really long number on there. So for the sake of this exercise, let's just say that it was an $800,000 purchase price. You'll notice that it automatically defaults to 20%. Let's go ahead and change this to 10% down payment over there on the right, and it automatically changed the actual amount. Now, when it comes to interest rate, the interest rate is going to depend on the market that day. It's going to depend on your credit. It's going to depend on whether or not it's a single family residence or a condo. So hopefully, while you're using this, we've already talked to you about this and you have a general idea of what the interest rate is. Keep in mind that it changes every day, sometimes several times a day. But for the sake of this exercise, let's just put in here 6%. If you have great credit and you're buying a single family residence, you have great debt to income ratio, I want to show you another website that you can go to check on the rates. It's called Mortgage News Daily. This is kind of a web. This is where everybody in our industry usually goes because Mortgage News Daily polls loan officers all across the country to try and get an idea of what the current interest rates are. Now, uh, you'll notice that it has a 30-year fixed at 6.5, a 15-year fixed lower, jumbos lower, ARMs are higher. Most people don't qualify for an adjustable rate mortgage. You really have to be in great financial shape. And obviously, who would want to do an ARM right now when it's actually higher than 30-year fixed? You can see that FHA is down to around 6%. 6.1% is fractionally higher than 6%. And then you got a VA, same thing, right around the same thing as FHA. Now we have better rates than most companies out there because we're brokers. So I would just try and encourage you to go by whatever our last conversation was. You can also we can set up a follow-up meeting and go over the market if the market has changed. But for the sake of this illustration, let's use 6.25% because if it's saying the national average is 6.5 on there, there's a good chance that we are at 6.25, about a quarter better on a conventional loan. Now, here's where you're going to estimate, whatever your credit is. Now, keep in mind, we probably have already talked about this. If you're looking at your credit score, it's going to have a different, um, uh, what they call scoring model that they use because it's looking at your ability to pay over a 5 to 7 year period. And that affects things like your credit card debt and car pay or, purchasing a car. But for the purpose of buying a home, mortgage rates are following more closely the 30-year bond rate. Um, so, rates do go up and down every day, sometimes several times a day. And depending on your credit, it's also going to depend on your interest rate. But for this exercise, let's assume you have great credit. It's a single family residence. You notice when I hit the more details, a whole new area popped up here, and it wants to know approximately what your homeowner's insurance is. Now, that can really vary depending on, where you live. If you live in an area that is, susceptible to fires, it's going to be much higher. If you live in an area susceptible to flooding, much higher. Um, but I would say that for an $800,000 house, just to be safe, I think $200 $200 a month, which would be $2,400 a year. You'll notice it says yearly there. When we go to property taxes, in the state of California, the average is 1.25%. But like here in Orange County, in most places, it's little under 1.1%, unless you live in a brand new neighborhood where they have, special assessments like Melrose. Um, in this case, let's go ahead and just use the 1.2%, 1.25%. So on a calculator, you're going to take $800,000 and you're going to multiply that times 1.25%, and you come up with $10,000 a year. So we're just going to put in $10,000 a year. And then if you have any HOA here, then obviously you would add in the HOA as well. I'm not going to have any HOA on this. And you'll notice that without me even doing anything, this is giving us an idea of what the monthly payment would be at 6.25%. So you've got principal and interest of $4,433. You have property taxes of estimated of $833. Homeowners insurance estimated at $200. And based on that credit score of 760, it's calculating mortgage insurance of 162 a month because you're only putting 10% down. So on a purchase price of 800,000 with a loan amount of 720,000, if you look to your left, it shows you the estimated monthly payment of $5,628. That's what we call uh, uh, PITI, principal, interest, taxes, and insurance. And of course, this is also adding in mortgage insurance. If you were putting 20% down there, there would be no mortgage insurance. So you can always save this if you wanted to and put in the property name and the description. But yeah, it's really cool. It's really easy to use once you've done it a couple of times. And I highly recommend you playing around with it because, like I said, there's going to be times where you're going to want some answers, and you could get this done in a matter of minutes as opposed to waiting for one of us to get back to you. But that should not take the place of us having conversations. We should still we want you to feel comfortable to reach out to us. We can have a Zoom and go over everything. We can put together a different type of spreadsheet for you, but that usually takes a little bit of time. So I hope this helped you, and I hope everybody has a wonderful day.